You guys don't even know what happened yet. So this is the 6th or 7th weekly commentary. I was recording and I did not press the recording button. I was recording since, I don't know, maybe 10, maybe like 9:30 or onwards a bit. So let's do it again. Okay, let's get the vertical lines. That's going to be Monday's open. So take two. Am I recording? Yes, I am. Okay. So we can see the week it ended bearish. We started higher and then we traded down. Now I want to show you guys one thing, right? So right today, I've told you guys what? I've told you guys change your time to my time. Actually, let's start with the DXY. I've told you guys to change your days, your time, I mean, to New York. So you click this on TradingView and you go to New York, UTC -4. It's going to change again back to probably UTC -5. Um, when our hour goes forward again, have it to New York because all the references to times I'm going to give you guys is going to be in New York, right? Now you can see all these annotations I have purely because I told you guys I, done the recording, but like an idiot, I didn't press record. So let me remove these for now. All right, cool. I'm gonna put you guys into an intraday level. Usually I just show you on an hourly, but we're gonna get closer to intraday levels, so I want to show you intraday level. Now, what do we see? The kill zones when you use the New York time, yeah, they're 2 a.m. to 5 a.m. for the London Open, and they're 7 a.m. to 10 a.m. for the New York. London Open is 2 to 5, and New York is 7 to 10. Where is the low of the day formed, and the low of the week was actually made at the here as well. 5 a.m. New York time, which is the end of London Open kill zone. This shows you and reinforces the fact that we are in fact dealing with an algorithm, and it's true that this algorithm does work based off time, because you'll see a lot of the times these lows and highs of the day are made within this these times of the day, London and New York kill zone. There's a third one, but I'll introduce you to that later on. It's not as favorable as these two. I want you guys to focus on 2 to 5 a.m. and 7 to 10 a.m. on the New York time. London time, that's going to be 7 to 10 a.m. and 12 to 3 p.m. That's if you want your time to stay in London time. However, what happened? And let me remove this for a sec. We come up higher and we trade lower. And we come up higher and we trade lower again. But we can add some more context to that. What are these? These are relatively equal highs right here. This high and this high. They're relatively equal. Now, on the intraday level, right? Whenever you want to, actually, let's just bring that out into real time. Whenever you want to sell the market, you always want to wait for an intraday high to be removed from the marketplace all the time. You don't want to short here. You don't want to short here. You want to wait above highs, because what's above highs? Winning buyers. So who are we selling to in the market? We're selling to buyers at a very high price. This for buying, because remember, buy stops rest and reside above old highs. So within this day, there's willing buyers. Retail see this as what is well. Retail see this as some level of resistance. Stop losses. There's a ton of orders piled up above here. The algorithm acknowledges the fact that this is the traditional way of trading, and it will attack these orders. Now, what I'm going to do for you guys, this consolidation that happens above the high is not by chance, and I'm going to go into a 3-minute chart and show you that. When we run the high, what do we see? We see this happen. We see this happen, right? Look how equal these highs were. And we run that above here, and we break down lower. When we break down lower, what do we see? From here to here, we'll start to respect the highs. We're not removing highs anymore. We attack this low here, and we come up again, and we attack this low. But now we're attacking this low. This is the market structure shift. Now you're waiting for entry. You could have entered here on the fair value gap, stop a bit above here with the DXY. Obviously, you need to correlate that to the EURUSD. This right here, this move here, this is the type of move you want to look for. Look at how aggressive the pricing here is. This shows clear willingness and displacement to the downside. Then we edge, and we come up. We come up into this gap, fair value gap here. This is where my eye would go to. The stop would go above this high, right? If you get stopped out here, there's another entry here within this gap if price wanted to. But you see when price reacted off here, what do you expect the next candle to be? Bearish. And we trade down lower, lower. Until when you start to see price gyrate back and forth like this, you don't want to be in the market because it's just collecting orders, accumulating orders. And then what happens? Significant move higher. That was Monday's trading. Now, if we go on the 15-minute again, I want to show you something for the Tuesday. I think maybe it was a 1 hour chart. Okay, here. So Tuesday again, we run up within the London kill zone. Yeah, so 2, 4 was the high of the day, was actually the high of the week as well. And then what happens? We run this high and we go up. On the way down, what happens? We remove this low. This wick takes out this wick. What are we looking for now? When this happens with one candle down, this is a beautiful model. This is such a high probability model as well. When you get this run higher and there's one candle coming down, the next candle after this, if this does not retrace here, and you see how it barely retraces, and then it just comes straight down, what happens from this wick to that candle's open? There's what? This candle as well, yeah? Because let's not consider this candle's wick. What happens? There is what? There is an imbalance. Now, I want you guys to see how perfect this imbalance is. Look at the low for this candle when I show you, and look at the high for this candle. The low comes in at 98.805. So, and this candle's high is 98.760. So there's an imbalance from 98.805 and 98.760. Now, what's the high of this candle? 98.805. It completely to the pip, not one pip more, not one pip less. Exactly fills this imbalance and aggressively reprices lower. If you could have matched this with the Euro USD, it would be that is like the trade where like you're freak now. If you can catch that, you are progressing significantly. And you can only wait for these type of setups. If you do, your win rate will be high, but your volume of trades will be very low. Now, trading throughout the week, the rest of the week, the DXY is consolidating. Nothing too, nothing too interesting going on. Now, to touch on one thing that I've spoken about, I've got a few questions from you guys as well. Why is Friday not a favorable trading day? Well, Friday's not a favorable trading day due to the fact that it has usually doesn't have any contribution to the expansion of the weekly range. So by expansion of the weekly range, I mean it doesn't break up higher, it doesn't break down lower. unless there's a significant news driver. And I want to put to bed this rumor that Friday's a bad day because there's increased manipulation on Friday. No, people, listen. You have to realize that the most of the people out there, they don't know what they're talking about. They don't even fact check what they do. They're not even willingly back testing. They literally hear it from someone and they go along with it. And then they tell someone and that person goes along with it. When does manipulation occur in the market, in the forex market especially? The main bulk, the meat of the manipulation comes from news events. This was Friday. What news event is there on Friday? There's nothing. There's nothing. You see this orange folder? Nothing. Yeah? So it's not increased manipulation. That's not why it's unfavorable. It's unfavorable due to the fact that it has usually no contribution to the weekly expansion. You want to trade the expansion down lower. So, for example, you want to see fill in this imbalance and then move lower and start to make more of an expansion of the weekly range. But we don't get that on Friday usually, unless there's a significant news driver, like a red folder, like NFP. Then you can expect those weekly expansions to be carried on the third on the Friday. Usually it's done on the Thursday. That's what usually happens, right? So that's why you don't want to trade Friday because it can catch you off guard. You'll be looking at this gap here and think to get short here, but what happens? It goes down and it comes up and you'll get taken out because Friday usually doesn't have any contribution to the weekly range. That's when you want to avoid trading the Friday. Now, what's happening in the DXY market? Relatively equal highs. Now, it's not exactly equal. I know that, but it's equal enough for retail traders to accept this as a quote unquote resistance, right? They don't need to be exactly equal. The more equal, the better, the more liquidity that'll be above there, but they're relatively equal. What I want to anticipate is a run above these. Now, when I say run above this, I don't mean we're going to be bullish then because we're going to be, price will be held, it won't be let like aggressively priced until NFP because NFP is this week and we know that, right? I want to see price run above here and then I want to see what price does there. Does it offer sells on DXY? What does it do? Is it willingly gonna trade above this? We want to see what happens when it does that, right? Right now we feel this imbalance and we're moving up higher. That shows institutional order flow to the upside. When you're moving higher, one big candle up, feel the imbalance, moving up higher. Gone to the euro, similar, right? On the euro, we move down. On the hour, what happens? We come up, we take out these highs. This high is still intact, and we move down lower. Two candles straight away. What happens? Imbalance right here from this wick. This is the end of the imbalance. From here to here, there's imbalance. Now, if we go onto the 15-minute for the Monday, you see those candles, they were definitely some sort of liquidity that we would target within the market. Let me just outline them. You see these two candle wicks, three in fact. Those are going to be intraday highs on the 15-minute. Watch. So what happens here? All this liquidity is building up. Come up. You'll sort of this resistance, this trend line if you want to put one here. And what happens? We trade into that hourly imbalance and then we aggressively price the price down lower. Run up again, close some of the imbalance, and we aggressively price lower. Now, what do we have here? A market structure shift on Euro USD. The market structure shift again. Remember this, if I show you this on the Discord, look at this, yeah? I'm gonna show you our Discord now. When you see this, look at this pattern. I've sent this twice into the Discord already. One, yeah, look. This, that's one, and this is the second one. There's the market structure shift, right? But where does the market structure shift occur? Under when you finish attacking lows. You can't have this in a bullish market. If you're trading higher and then you get that, you don't take it. It's a market structure shift. When you're trading lower, you're attacking sell stops and then you make a low and then you aggressively make a high. Take out this one. What happens then? You come to the 50% of this imbalance here and we trade higher again. Now, where is the market structure shift going to end? This is where you guys need to know, because it's all good to know where it starts, but where do you anticipate it ending? Look at the open float on the 15-minute. Now, what is the open float with reference to chapter 1? The liquidity resting on the left-hand side when there's a shift in market structure. And what could the market react off of? There's nothing. Look, all this imbalance here is closed. What is the only imbalance that you guys see? It's this candle, yeah? You don't want to be more long into that candle. And you can see it doesn't trade much above it, yeah? 5 pips. The price here is 7.6. 10 pips. Not even 10 pips, yeah? And then what happens? We consolidate. And then what happens? We move down. Again, London gives you the high of the day here, right? We run this short-term high. On the intraday level, we run this high and we price down. Now we price down here, and what happens? 7 a.m. The start of what session? New York. We gives one push higher into the 50% of this imbalance. It's not even going past it. And then what happens? We move down. And then what do we have again? We still have this level of imbalance within the market. Again, market structure shift until when this highs run out, this level of imbalance is so important to know when to get out, because if you get in here, euphoria is going to take over your mind. You think you've caught the trend. Don't do that. When you see the market structure shift happening, I want you guys straight away to look to the left and see where is it likely going to react off of. Imbalance areas is where I want you guys to focus for now, right? We're going to learn more about order blocks. When we learn about order blocks, we can also slap that in and expect them to trade off order blocks, which it did here, this last up close candle before the down move. But for now, here. And the structure shift ends there and we go down lower. Now we go down lower, it offered many trades within this imbalance here. We trade down here. This is Thursday, yeah. This Thursday was this disgusting price action, I remember. Then what happens? We drive down lower. This creates what? What does this create? Equal highs relatively. The market does what? It drives down lower and then it drives higher. Because what does it do? It clears the sell side and then clears the upside. Now, what's that? Clears the sell side, clears the upside. That's again a market structure shift, guys. Yeah? On the intraday level. Imbalance here, filled perfectly, and we move higher until Friday. We don't manage to get above this high, and then Friday drops down lower. Imbalance fill here, comes back, runs this high, imbalance fill again, and goes down lower. We come here now. Now, I want to take your attention to the weekly and what I expect for the weekly, right? What I expect for the weekly is this. I expect this weekly swing low to be attacked within this week or this week and the next week. But this is my target right now for the Euro USD, I'm going to be short until this low. I want to see this low being removed from the market. Let's look at price action naked without any drawings on. What happened? We moved down lower this one big week. And what do we leave when we move down one side heavy? We leave imbalance. And what do we know has to happen in areas of imbalance? It needs to rebalance. It rebalances here and it comes down. Now, it goes up again higher. This is why I want you guys to pay attention. This week's high runs this week's high. Weekly highs and weekly lows are significant pools of liquidity. Make a note of that. You see how we run this high and we come back down lower? It's a liquidity run on this week. You see how this week isn't challenging? This is a high being formed. Look at this now. Now this is a high. You have this now. Anything above the 50 is a good shorting area. You're above the 50 is still a good short. Of course, short in small areas such as intraday imbalances and things like that. I'm looking for this to get removed from the market. And why? This is something called the market maker sell model, which I'm going to teach you guys. The market maker sell model happens on all time frames. What I've shown you already on Euro USD, what I showed that happened on the Tuesday when we ran above those significant, no, when I showed you on the Monday on the Euro USD, what I showed you guys here. No, it was on the DXY. Remember this? And this happened in here? That's a market maker sell model on the low time frame. Now, if you go to the Euro USD, we had a large consolidation. For how long was this consolidation, guys? It was 2 flipping years. It was 2 years of it going down. This wedge for 2 years was being formed. How much liquidity do you think is resting above this? There is so much liquidity built up above this high and below it as well. And then what happens? The move down and then the move up. Now, the move up, when you see this form, this is not a double top. We did not take out this high, it's intact. It's OTE as well from here to this one, it's OTE. And then we break down lower. When we break lower around here, this is now interesting. We're breaking this low. Even here, what happens? High, low, higher high. This high is higher. Yeah. Lower low. There's a breaker block in here and there's imbalance here as well. We don't quite get to the breaker block, we feel the imbalance. And that's what you do. You have to anticipate and you consider both of them. And this is where you sit on your hands. When you get here, you sit on your hands and see which one is it reacting off of. You don't want to jump in at the fair value gap because what about if it trades to this? Or it could even trade to this gap within this order block. And I want to teach you that. It's called the PDA matrix. And this shows you how much of a patient trader you are. It's all about waiting for the rejection at significant price levels. Significant price levels being imbalances, order blocks, breaker blocks, mitigation blocks, etc. The whole shebang that we're going to go through on chapter 2. Then what happens? We break down lower and we leave imbalance when we trade down this heavy. Now, we trade up into the imbalance left here by this candle's wick and here. And then we trade down more heavy. And then we leave this imbalance, we trade up and then close it, and we're going to trade down, and I'm anticipating us to trade down more heavy because every single time there's an imbalance fill, we trade down heavy because that's what the market maker sell model says. And now the market maker sell model, you see how this outlined end of market maker sell model, MMSM is abbreviation. We anticipate the consolidation that started it, the low of the consolidation, we see that as a target. My initial target is the weekly low. If we're trading through that, so let's say this candle now, let's anticipate it. If this candle If the next week's candle trades all the way down in one way, doesn't offer no upside, what does that leave? Imbalance. So then we can expect a retracement into the imbalance and then one more final move down to finish the market maker sell model. The DXY, we've had this imbalance and we traded down into it and we rejected twice into it, right? We've rejected twice into it. This week's candle, what is the possible chance of the next week's candle becoming higher from this, right? We, after rejecting off of a significant support level in being the imbalance, we're now edging higher in the market. So what's the likelihood of the next candle edging higher and taking out these highs over here is what I have my target on first, around 101. Next week is NFP week. It's the start of the new month as well. Don't trade unless there is clear setups, guys. What I'm looking for intraday, got 15. Again, intraday level. We have this intraday high that was made on the Friday, and above it we have imbalance. If you go into the 5 minute here, there's imbalance, and this is an order block. I want to see how price reacts off of here. This is what I personally want to see. I want to see price react off of here, but I'm gonna be sitting on my hands and see if price breaks this because price it's the NFP week and there's gonna be tons of manipulation. There's gonna be manipulation at NFP and the build up to NFP. So I want to see Monday what Monday does. I want to see if Monday quickly goes and makes the high of the week within this range here and then trades down lower is something I'm looking at because I want to see the run above this high into this imbalance and then trade down lower. That's something I love to see in price. Let price trade for the Monday London session at least, and it will become clear where it wants to go. Patience pays a virtue, trust me, especially in this game. You don't want to be trading every candle, you don't want to be trading every day, not even every single session you don't want to be trading. Sometimes you just want to collect data, and that's fine. Let those imbalances form. Let those order blocks form. That's what you need. You need these imbalances to form. How can you trade without the imbalances? What are you going to be trading in this mess? What are you going to be trading in this mess? There's nothing here for you guys to trade. Why would you trade this? Trade within the imbalances because you know what happens here. There's usually rejections. So sit on your hands, be patient. Something will come to you guys. Same thing with the DXY. There's what here? There's a significant low imbalance with the order block. So we want to see that get traded to before we see any move higher on the DXY. Because remember, before we want to move higher, we got to take out some sort of intraday low. I want you guys to check it. Intraday level, so within the day. Intraday means from within 1 day of trading on the like 5-15 minute. You'll see every single time a high is taken out, we'll trade lower a bit. And whenever the bias is bullish, you want to see what taken out. A low get taken out before the move higher. You never want to short the market unless there's been an intraday high taken out. Because what you're doing is you want to sell above the high initially. You want to sell to buyers because that's what the market's doing is buyers are wanting to buy stuff, so sell it to them. If you want to buy the market, wait for a low to get taken out because below the low there's sell stops in the form of breakout traders and they're trying to sell the market. So what do? You buy from the sellers. And that's how smart money trades. Smart money not being smart money concept, Smart money being the well-informed traders, the well-informed institutions, the people that have a brain, the people that have great information within the market. Could you imagine if my Mac died and I had to do another recording on top of this? Oh my god, I would have just I don't know. But yeah, it's coming to the end of this weekly commentary as well. I gave you guys an insight to the intraday level because we're getting closer to there, and I want you guys to start seeing how the intraday mechanics work. So again, just to look at this one, the DXY, whenever there's equal highs, you're waiting for the move above it, and when you move above it, you're waiting to see what happens here. Now, when this low breaks, you're in the game now. Now you're waiting like, okay, is this the moment to get entry? Wait here, imbalance fill, you can trade. This is the DXY. If you're bearish on the DXY, you'll be buying the euro, and that's it. It can be as simple as that usually. Trade down lower, come here, trade up higher. This is called an order block, but also what a fair value gap fill. From here to here is only buying in this candle. There's no wick that's overlapping it or no candle overlapping it here. Comes up, trades higher. This candle is just pure manipulation. It has created some sort of equal low, but it's actually traded below this low. Move higher, what happens? This is called inducement. Inducement is something someone's asked me in the mentorship. What does it mean? Inducing sellers, this means you're bringing sellers into the market. When they see this and they see this coming down, they start to see that as a move down lower. They see this as maybe a fake out and people selling this. But what do we see? All this buying here is imbalance that needs to get filled. Surprise, surprise, it comes to the 50% of this range of this imbalance. And then it moves up higher. And then what do we see? This is the market structure shift again. Higher. Break this low. Come up. This is probably the test of the breakup within here. Remember, this is the low before the high. So the low before the high, this comes and tags it perfectly. And we move down lower. Imbalance fills, comes down lower. Doesn't offer much here. But yeah, you don't get the gist of what I'm saying. Any questions, ask me. The new guys, you should not be watching this video. If you guys are watching this video, please go and watch everything in order. If you haven't even watched the free content, go watch the free content first. There's no rush. These videos are staying here forever. There's no rush. They're literally here forever. As long as you're here in the mentorship, the videos will be here. They're saved. There's no time limit on when I'm removing them. Even when you guys are gone, they will be here, right? Any questions? You know where to find me. Snapchat, Telegram. Avoid messaging me on Discord because my Discord notifications are off because there's a few servers I was in. Now I'm only have my server and I'm in the my Forex Fund servers. But don't message me on Discord because I'm not that good at using Discord. It's like I'm a noob at it. You're better off messaging me on Snapchat or Telegram. I'll get back to everyone. Trust me, I'll always get back to everyone. But yeah, take care of yourselves. This one, yes, this one is recorded. I'll be with you guys with a lesson on Tuesday or Wednesday. Once everyone is caught up, I'll try to increase, the velocity that we're going through within the mentorship. But we're at a good space and we're at a good pace right now, and we're gonna cover the content quite fast. One video a week as well is pretty good because it allows you guys to practice and find examples. 2 videos a week, it might, hinder that. I don't want you guys to, decrease the quality in your learning to catch up more. But yeah, any questions? You know where to find me. Did not mean to do that. Take care of yourselves.